And now let's preview the week of March 20th to March 24th. It's a Fed hangover week. I think the Fed will have an impact also through next week, especially on Monday when there's nothing much on the calendar. On Tuesday, we have the RBA meeting minutes. They were extremely neutral, and we could perhaps learn a bit more because we didn't learn too much from the recent meeting from the Reserve Bank of Australia. We have the UK inflation report. This is a big event for the UK. Brexit resulted in a weaker pound, resulting in higher inflation, causing a stagflation problem for the Bank of England. So let's see if this problem worsens. In Canada, we just talked about, we have retail sales. We'll have more action from Canada. This certainly moves the Canadian dollar. This report, for those trading the Kiwi after this week's GDP report, we're back to our usual routine of milk prices every other week. On Wednesday, we have oil inventories, so more stuff for C dollar traders, and the rate decision in New Zealand. No changes expected. They're expected to leave chain rates unchanged, and perhaps continue pushing for a weaker Kiwi. On Thursday, UK retail sales, they've been quite bad recently. Also a result of the weaker pound. Brits are buying more essentials, less non-essentials. Let's see if this continues. Jobless claims in the US, like every week, new home sales, and New Zealand trade balance. And on Friday, we have Eurozone flash PMIs, durable goods orders in the United States. This is a good measure of investment, which is a good measure of growth. So if we mentioned growth as an issue for the Fed looking forward, this will provide more data about that, and the Canadian CPI. So we have lots of figures for those trading the Canadian dollar, our currency of the week. Okay,